morning, traders. Welcome to the TMT Stock Market Strategy video for Monday, September 19th. All right, almost a month is gone, and we really haven't gone too much. We did break down last Friday, and this past Friday was options triple witching. So a lot of rebalancing going on with the ETFs. Does skew a lot of what's happening, what really is happening out there. And at the moment, we're still right now. We had off of our Friday breakdown. We're still kind of stuck in a range, and I'm going to show that to you right now. So we did have a violent move last Friday. We took it all back to the upside on Monday, and then again we gave it all back on Wednesday, and then we gyrated for the last couple of days. So a lot of movements happening in the pre-market going into Europe and the opening here in the United States. So let's see what happens this week. It's going to be very, very interesting. We got some key levels that we're going to be watching. I want to show you some of the indicators. Our TMT trading model is still on a sell signal. So we shall see. It's going to be an interesting week this week. Let's get right to it. NYUD advanced decline with volume. You could see that internals, and this is just one of the internals that we watch, is starting to break down here. We are getting to be below zero. So a logical spot would definitely be a 2100 print in the S&P cash. So that's something that we're going to be watching and monitoring this week. Next is going to be stocks above the 50-day moving average. Now, this is not near a washout level, but this is not a good sign that stocks are losing their 50-day on a daily chart here. So 32% of stocks in the S&P are above the 50-day moving average. That's not a good sign. So we can't recapture the 50, so you can see that starting to break down here. Now, we're not at washout levels yet, obviously, and we only had really one big push to the downside, which was last Friday. So interesting to see if this thing can continue to move lower. And then when we get a washout, like something like this area here or these prints up in here, you usually get a market pullback or you get some sort of a buy down below. But we're not there yet, so there is plenty of room to run to the downside. Let's take a look at volatility. The ATR starting to spike up here. You could see that on this little pullback. So just like we had here in the Brexit vote, we spiked up, and then now we're starting to pull back down again. So see what happens. We definitely need more volatility to induce any type of selling. But this is just giving you a heads up, saying, hey, we're starting to have we're starting to break out of that range. Okay, now take a look at volatility. Speaking of volatility, let's look at the VIX. VIX just basically collapsed again. I just saw the commitment of trader reports on the VIX, guys. Heavily shorted by the dumb money in the report. The speculative money, dumb money, is the most short the VIX in this area here. So at the lows in this area, it's kind of crazy to be short. All you need is one event, and the VIX is going to explode. So at the moment, it's not happening. It did move up here, up at the 21 area. We're starting to come back in again. So we'll see. It's going to be interesting. It is interesting already, to say the least, with the way this crazy market is actually trading right now. All right, here's the 10-year. And you can see here this ascending triangle measure up to the 185. We closed at 170. Really had no movement in the 10-year, but interesting. Banks aren't doing anything on the rise of this 10-year, and that's also because of that Wells Fargo news of phony accounts. So it'll be interesting to see where this rate starts to rise and where bonds go. Speaking of bonds, let's take a look at the TLT. We hit our two targets of the 38% retracement, which came in at 134, and of course the 200-day moving average at 132.58. And now we're just kind of back testing this uptrend line. Now, I think rates are going to rise, and I think I've said that to you guys many times, that we did put a generational low, and I believe anyway, based off of the analysis, and I do think that rates are going to rise. The Federal Reserve and all the central banks around the world are in trouble once their rates really start to push up. Now, when you see a big move in bonds lower, you have to be careful, because the money's not going to rotate into stocks at these all-time highs. And especially when a lot of these, when rates are low, there's nowhere to put your money. So there's going to be a whole unwinding effect at one point. But right now, let's see if we get a gap fill here in the TLT, and then we can possibly look to short the TLT here. Okay. Next is going to be the dollar. Want to pay attention to the dollar here, guys. Dollar looks like it's starting to break out of a symmetrical triangle here, and if that does happen, as you know, it will put pressure on all of the commodity sectors, including precious metals, gold, silver, platinum, palladium, and of course oil. So pay attention to UP, and I would never count the dollar out, especially when you have a little bit of time on uncertainty. That should start to explode. This is the swing high we really need to get taken out, 25.25 on the UUP. Take a look at gold. Got a bunch of emails. Hey, what do you think about the gold mark and silver? Well, I like gold, and I definitely think that gold looks to be starting a second stage bull market. However, coming off of 2016 at 13, what is that? 1060, 1070 an ounce. You got to be kind of cautious to start buying gold up here. And as you can see, that 1380 capped this whole little move for the last 9 months, and we did break a downtrend, an uptrend line here. So that next target is going to be 13. If we lose 1300, I would look for the 38% retracement, which would be about 1250, 1260. That's going to be really the target. By the time it does get down here, that 200 would be somewhere in here. So that's what I'm really looking for. Or I'm looking for a very large and violent flush to the downside. Shake out all the weak hands, and then from there is where I think that we can regain some momentum and start another move higher in gold. Okay. Next is going to be the GLD. Just wanted to show that to you here. Descending triangle off of that double top. Measured down to 120 actually, which is 61.8% is 120, 138. So right around this area here is where I think the GLD can actually possibly go to. And on top of that, you're going to have, you got some areas here of support across at 124. And then, of course, that big area 120 to 121. All right, you can see that the RSI and MACDs are really not doing too well as well in the daily chart. GDX, just want to show you that as well. Holding up a little better than gold itself. But I think if we lose that 61.8% retracement, we could get a real hard flush back down to the 22. I'd like to see GDX come right into this consolidation zone. Right up in here between 19 and 20. It would be an ideal situation for gold to stabilize, base, and then start to move higher again. And that would be GDX. Spiders, just want to show you a nice clean chart here. We have 5 waves that we counted, and now that we're in this big, large pennant, you could see that Friday we didn't do anything. We had the doji, we had another doji in between a couple of big up days and a couple of big down days, and a lot of that move, guys, happened in the pre-market. So just let's see what happens here if we can get a move lower. 212.38. 212.30, let's call it, is going to need to move lower. And I think if we get to 212.30, we'll get down to the 210. And then we would reevaluate it. But right now, I'm still looking for a downside target of 210. 212.30 is going to be the next area where that needs to hold. And here's that 60-minute chart. Just wanted to show you guys. You can see here MACD on the push-up, really not doing too well. And as you can see here, 212.30 is going to be that big key. And then a 38% retracement comes in right around the 211.54. And then, of course, the 210 area and the spiders. Okay? Next is going to be the transports. Just want to show you that's clean, barely holding on to the 200. If we lose the 200, remember, guys, fund managers, money managers, portfolio managers, they all look at that 200. If we're above it, they buy it. If we're below it, they start to reduce their exposure. So it's something to keep an eye on. Next is going to be the IWM daily. And again, off of this big bearish rise and wedge, we actually back tested. We're sitting in our proprietary TMT proprietary channel. So it's going to need to lose the 119.75, which hit it to the penny last Friday. Okay. Next and last is going to be the Qs. The Qs did well. And remember, guys, a lot of this move that's been that was holding up, really just held up the market, was Apple and its suppliers, based off of rumors of they had a better pre-order on their Apple iPhone 7. So interesting to see. Pay attention to Apple too as well today, tomorrow, and see if we get a little bit of weakness in the markets. All right. Hope it helps everybody. Have a great day, and we'll see you tomorrow.